Today's topic is commercial banking in India. Economic growth throughout the world had seen a deep fall since the COVID pandemic. Geopolitical tensions, global uncertainty, and continuous rise in the price level have hampered the macroeconomic stabilization process of the economy. COVID pandemic and lockdown had curtailed the deposit and credit growth of India's commercial banks. For instance, credit growth in 2019-20 quarter 4 and 2020-21 quarter 1 was declined by 1.11%. But in later, it revived subsequently. In the post-nationalization period, the commercial banks were forced to lend for priority sectors so that they can grow efficiently, thus fulfilling the agenda of inclusive growth. This step had raised some pressures on financial health of the commercial banks in India. After the introduction of new liberal economic policy in 1991, Indian banking sector had undergone a massive changes with allowing private commercial banks in the banking space. Currently, there are 4 types of scheduled commercial banks in Indian banking space, consisting of number 1, public sector commercial banks, for example SBI, Bank of Baroda; private sector commercial banks, for example ICICI, HDFC; foreign banks, for example HSBC, Citibank, etc., and the regional rural bank. Commercial banks are the main pillars in Indian banking structure. Commercial bank is a financial institution which accepts deposits from the public in various forms and giving loans to businessmen investors with an aim to maximize profit. Profit maximization is the main motto of the commercial banks in India. There are certain principles which are to be fulfilled by the commercial banks to deliver a good and sound banking facilities to the public. Let me focus on those principles now. Number 1, liquidity. Commercial banks must meet the demand of the public in day-to-day basis. And that's why they must have that sufficient amount of liquidity by keeping the optimal level of cash deposit ratio. Number 2 principle is profitability. Profit is the key concern of any organization to expand. A commercial bank's main motto is to maximize profit. And that's why this is their main aim, to maximize profit. Number 3 principle, that is stability. A sound banking system would be stable only when there should be the proper allocation of the credits. And thus, the role of the commercial bank is very vital in this regard, as they are allocating credits to the sectors of the economy. The next principle, that is safety. Trust and confidence among the public towards commercial banks is very much crucial for ensuring a good and sound banking system in the economy. This will be fulfilled only when the commercial bank provides good, safety and reliable banking facilities to the public. Next principle is expansion. An expansion of banking system would fulfill the agenda of financial inclusion, which is one of the crucial elements of fulfilling and ensuring inclusive growth. More expansion in banking means more chance of capital formation. More chance of capital formation means the economic development would be more. Next principle is flexibility. A flexible banking system only could take steps related to expand and contract of credits in the economy. And that is based upon the requirements of the economy. Let me first focus on the role of the commercial banks. Commercial bank plays a pivotal role in the process of economic development through the following ways. Number one, mobilization of savings for capital formation. You know that commercial banks collects deposits from the public through various schemes and mobilize that in formation of capital. The next is financing industry. Commercial bank provides short-term, medium-term, and the long-term credits to the industry for rapid industrialization. The next one is financing trade. They provide loans to the exporters, wholesalers, etc. to be involved in international trade. Besides, they help exporters and importers by providing foreign exchanges. The next is priority sector lending. It is one of the crucial role played by the commercial banks in any economy, especially for an underdeveloped economy or developing economy. They provide loans at a concessional rate to all the priority sectors, including agriculture, to fulfill the agenda of inclusive growth. Next, help in implementation of monetary policy. The success of monetary policy of the Reserve Bank of India depends on the role of the commercial banks. Commercial banks helps in making monetary policy more effective and efficient. In 1969, commercial banks were nationalized with a target to fulfill several agendas, including the mobilization of savings. And the system would play major role in widening organizational base in the country, along with delivering a sound banking system. But operational inefficiency, rise in non-performing assets, low profitability, low capital base, etc. forced the government to appoint a committee under the chairmanship of M.Narasimham to initiate reforms in the banking space in India. Narasimham Committee 1 submitted its report with the following recommendations. Let me focus on those recommendations. Number one, restructuring banking system. The committee suggested and recommended that there would be 4 tiers of banking system in India, consisting of international bank, national bank having branches throughout the nation, local bank, and the banks confined to the rural sector. Next, removal of licensing. The committee suggested that no further nationalization is required for any particular bank. And they also recommended that branch licensing is to be removed. Next is Asset Reconstruction Fund. The committee suggested to set up Asset Reconstruction Fund to ensure quick recovery of loans. Next, interest rate deregulation. This is very crucial recommendation given by the Narasimham Committee 1. Interest rate deregulation means, as per the suggestions and the recommendations of the Narasimham Committee 1, they suggested to the government that interest rate on deposits not to be deregulated, but interest rate on loans and government borrowings should be deregulated gradually. Reduction in CRR and SLR is the next recommendation given by the Narasimham Committee 1. And they suggested to reduce SLR rate from 38.5% to 25% in a phased manner. They also suggested to reduce cash reserve ratio. The next suggestion, that is expansion of capital base. Expansion of capital base, that was the next suggestion given by the Narasimham Committee 1 to the government. In their report, they mentioned that banks are allowed to raise private capital. Almost all the recommendations of Narasimham Committee 1 were accepted by the government. In 1997, government once again appointed Narasimham Committee to review the financial sector, including the banking sector. And they have given their recommendations once again. Let me focus on the recommendations given by the Narasimham Committee 2. The first recommendation, what they have given to us, that is prime lending rate is to be determined freely. The next recommendation given by the Narasimham Committee 2 is capital adequacy ratio should be at least 10%. Third one is non-performing assets is to be reduced to 3% by 2002. Next recommendation, no financial assistance is to be given to any banks for recapitalization. And lastly, they also recommended that special recovery tribunals are to be set up for recovering loans. To check and perform the overall scenario of the commercial banks in India, we would be focusing on these particular indicators. The indicators are: number one, collection of deposits by the commercial banks over the last 10 years. The next is disbursement of loans and advances. Third one is expansion of bank branches over the times. Fourth, investments in government securities by the commercial banks. Next, priority sector lending. And lastly, we will be focusing on amounts of credit to the industrial sector for rapid industrialization. Let me first focus to the first indicator, that is deposit collection by the commercial banks. Deposit collection is one of the important functions of the commercial banks. Expansion of bank branches and people confidence towards banking system would raise the deposits collected by the commercial banks. Let me focus on the trend of deposit collection by the commercial banks in India over the time span 2012 to 2021. From the figure, it has been observed that it has been continuously increased over the times, and in compound annual growth rate, it has come out 10.90%. It would be much more prominent if we look the performance of the commercial banks in terms of deposit collection year-on-year basis. Let me focus on the deposit collection by the commercial banks year-on-year basis. This figure tells us that over the times, commercial banks have experienced a fluctuation in deposit collection. In the time of COVID, that is in the year 2020, it was reduced to 8.78% from 10.53% in the preceding year. But then it recovered subsequently. But the negatively sloped trend line of the growth reveals that over the time span, deposits at the commercial banks have been in declining trend, which is to be taken as a serious note. Next, the trend of deposits collected by the commercial bank could be discussed in terms of the several regions in India. We have taken several regions: northern region, northeastern, eastern, central, western, and southern. So, as far as these regions are concerned, the figure tells us that western region has got the first position in terms of the deposit collection in that due time period, that is 2012 to 2021, followed by southern and the northern region. The performance of the eastern region and the central region are not so much satisfactory in the context of the other regions. So large scale of industrialization, rise in exports are needed to boosting up deposits collection by the commercial banks in the eastern region as well as in the central region. The entire dataset has been collected from the Reserve Bank of India. Next indicator, that is bank credits in between 2011-12 to 2021. In between this time, it has been observed from the figure that the commercial banks has given a steady level of credits to the economy. Bank credit is one of the crucial elements of the economy to expand. Rise in bank credit is being considered as one of the important indicator for the economy. And in between 2011-12 and 2021, credit given by the commercial banks have grown at 10% in CAGR. Once again, this particular figure is used to focus on the trend and the growth of credits given by the commercial banks year-on-year basis. From this figure, it has been observed that in 2012-13, the credit growth was 14.06%, which was down to 5.58% in the year of 2021. That may be due to the COVID pandemic, but over the time span from the figure, it has been observed that as like the deposit collection by the commercial banks, credit given by the commercial banks has also experiencing a high degree of fluctuations. And that is the very serious issue before the policymakers and before the Reserve Bank of India. Even after adoption of several policies and mechanisms, credit growth in the economy is not very much stable in nature. The next indicator is number of bank branches and the proportion of rural branches in total branches. Rapid expansion of bank branches can bring more people in the banking system and thus fulfilling the agenda of financial inclusion. The first figure shows us the number of bank branches over the time in India, and in this figure we have covered 2007-8 to 2021. And in that due time period, it has been observed that number of bank branches have steadily increased in India. Along with that, the number of rural bank branches have also increased. But in the second figure, tells us that the proportion of rural branches in total branches of all scheduled commercial banks in India have been declined till 2016-17. But after that, it rose. But government should consider this matter seriously because rural branch expansion by the commercial banks is one of the crucial factor to fulfilling financial inclusion agenda and to fulfilling inclusive growth. Next indicator, what I have taken here, that is the number of ATMs. Number of ATMs on-site and off-site, considering both of all the scheduled commercial banks, have steadily increased over the times from 34,789 in the year 2007-8 to 2,11,332 in 2021. This is a true reflection that the advancement of technological advancement of Indian banking system. The data set once again has been collected from the RBI. Next indicator, that is the bank's investment in government securities. Government securities in monetary system is one of the crucial instrument. That's why in this present analysis, it has been taken into considerations, that is the bank's investment in government securities. And investment in government securities by the commercial banks is to be treated as a confidence of the banks towards risk-free monetary instrument. The figure shows us that over the times, the bank's investment in government securities has increased, but not in a very steady level. Thus, the growth curve is having high degree of fluctuations. In 2005-06, it was negative with 2.54%, and in the recent past, in 2019-20, it was reached to 19.34%. Obviously, that is a good recovery. Next indicator is priority sector lending. Priority sector lending is one of the crucial aspects of any developing economy. It is the matter of focusing on national priorities to fulfill and strengthening inclusive growth. The following table reveals the amounts allotted to the priority sectors by several regions in India in the time span 2020 and 2021. In terms of the gap between these 2 years, it has been observed from the following table that Western region has got the first position in terms of the difference in between these 2 years towards allocation of funds to the priority sector, followed by Southern region, then Northern region. The performance of the Eastern region and the Central region are not up to the mark. The entire dataset has been collected from the Reserve Bank of India. In terms of the growth of priority sector lending in between the 2 years, 2021 and 2022, the several regions could once again be presented. From the growth rate, it has been observed that Western region has got the first position with 16.24% growth rate, followed by Northeastern with 16.07% growth rate, and Southern with 9.17% growth rate, whereas the Eastern region has achieved only 7.12% growth rate. So the government and the Reserve Bank of India must focus on this matter to expand priority sector lending in the Eastern region to fulfill and strengthening inclusive growth agenda. The entire dataset once again has been collected from the Reserve Bank of India. Credits to industry. Any sector in the economy would flourish only when the sector receives the proper credits from the commercial banks. Therefore, the present analysis is trying to focus on the banks' credits towards the industrial sector to expand industry and to fulfill the agenda of a rapid industrialization. This analysis has been covered 2012 to 2021. In between this time frame, it has been observed that commercial banks has raised its allocation towards industrial sector, but the curve indicates us that it is quite flatter. So that's why we can say that more allocation towards industrial sector may be needed to flourish the economy with proper growth rate. This dataset has also been collected from the Reserve Bank of India. Region-wise, once again, it has been observed that Western region has got the first position in terms of the allotted lending amounts to the industry, followed by the Northern region and then Southern region. The performance of the once again Eastern region, Central region are not up to the mark. This dataset is being collected from the Reserve Bank of India. After focusing this, let me now concentrate on the basic problems of the commercial banks or basic threats before the commercial bank. Over the time, it has been observed that competitive environment in the banking space could be a threat to the commercial banks. Fall in credit deposit ratio over the times could be a threat to the commercial banks. Low profitability and annualized return on assets that must be investigated. And lastly, we would be focusing on the performance of the commercial banks in terms of the NPA management over the times. Let me focus on trend of credit deposit ratio. Over the time, it has been observed that credit deposit ratio is in the declining trend. What is it? It is the ratio out of the total deposits collected by the banks how much it lends. The figure shows us that in the COVID year 2021, it has been steadily decreased from 78.3 to 76.5. Further, it declined to 71.1. Over the time span, credit deposit ratio has been diminished. At least from the figure, we can conclude that. Trend of credit deposit ratio region-wise, if we look on this matter, then it has been observed that Western region, once again, Western region has got the highest position after 2016-17, followed by Southern, Northern regions. Whereas the performance of the Eastern region, Central region and Northeastern region were not up to the mark. And their position were below than all India figure. And Western region had improved its performance since 2015, except the pandemic year, and crossed Northern region on 2015 and crossed Southern region on 2016. This dataset has also been collected from RBI website. Next indicator that is needed to be taken into consideration, that is return on assets. Over the times, it has been observed that return on asset of all scheduled commercial banks have improved. Undoubtedly, we can say that in March 2019, it was minus 0.15. That was improved to 0.64 in September 2020. And further, it improved 0.79 in September 2021. And in between the public sector commercial banks and private sector commercial banks, it has been observed that in terms of the return on assets, the performance of the private sector banks are far better than the public sector commercial banks as far as this time frame is concerned. And in September 2020, return on assets of private sector commercial banks was 1.10, which was further increased to 1.17 in September 2021. Next indicator, that is profitability. We know that there is a lot of debates about the profitability of the commercial banks in India. Profitability is a key concern for banking sector in India for a long time due to the excessive rise in non-performing asset and other issues, including the global slowdown. But the recent data has confirmed us that the commercial banks have once again regained its momentum and therefore made a good profits. Data tells us that all scheduled commercial banks profit in the year September 2020 was rupees 59,426 crore, which was steadily jumped to rupees 78,729 crore in September 2021. That means 32.48% jump in the net profits over the time span. That is definitely a very good indication for the commercial banks in India. Next indicator, which is very crucial for the discussion, that is a non-performing asset. The trend of non-performing asset of all scheduled commercial banks in between 2008-9 to 2019-20 has been presented here, where it has been observed the performance of the public sector commercial banks were far below than the all scheduled commercial banks. Because the figure tells us that the NPA management of public sector commercial banks were not so satisfactory, so that's why their proportions were far higher than the all scheduled commercial banks in India. It has been observed that since 2017-18, the non-performing asset of all scheduled commercial banks as well as public sector commercial banks have been in declining trend. This is undoubtedly a very good indication, but still, public sector commercial banks are having high degree of non-performing asset compared to the all scheduled commercial banks in India. Gross non-performing asset in PSUs, that is the next indication. In this analysis, we would be focusing on the total non-performing asset, gross non-performing asset in priority sector and in non-priority sector. Here, the 2 years data have been collected from the Reserve Bank of India. Year 2020 and year 2021 have been taken into consideration. In between 2021, NPA in non-priority sector has declined from 66.34% to 55.24%. Whereas in agriculture, in the priority sector has increased from 17.31% to 19.98%, followed by the MSME sector with 17.64% in 2021 that has increased from 14.09% in 2020. The same thing could be discussed in terms of the private commercial bank. Gross non-performing asset of all scheduled commercial banks is to be taken into consideration. The following figure reveals us the recent scenario of non-performing assets of all scheduled commercial banks in regard to the priority sector and non-priority sectors. In between 2019-20 and 2021, non-performing assets in the priority sector has steadily increased from 32.79% in 2019-20 to 40.45% in 2021. In the same time, non-performing asset in non-priority sector has declined from 67.21% to 59.55%. Lastly, we can conclude that presently the government has taken multi-dimensional strategy to promote efficiency and competitiveness in the banking space in India, along with focusing on the term that is cost effectiveness. Government has successfully implemented merger strategy through which some commercial banks have been merged with the big size bank to ensure the objective of cost effectiveness. Banks' non-performing assets in total advances had declined since 2018-19. That is definitely a good indication. For instance, net NPAs had reduced to 2.2% at September 2021 from 6% in 2019-20. Besides, annualized return on assets of all scheduled commercial banks has improved from 0.6% at September 2022, 0.8% at September 2021. Whereas the profits of the all scheduled commercial banks has steadily increased from rupees 59,426 crore at September 2021 to rupees 78,729 crore at September 21-22. This statistical data once again proved that banking sector in India has once again regained its performance despite all the uncertain scenarios in the global platform. Proper flow of credits to the economy and trust towards the banking sector could play a crucial role in fulfilling inclusive growth agenda. To raise the confidence among the public, the government has raised the deposit insurance scheme from 1 lakh rupees 1 lakh to rupees 5 lakh per depositor. Encouraging private participation through the large scale of disinvestment, capital infusion, proper flow of credits to all the sectors, especially focusing on priority sectors, and proper NPA management, etc., could play the role as a catalyst to ensuring effective, efficient, and sound banking sector in India. Thank you so much.